Okay, welcome to this video. We're going to kind of put things all together now. So the resolution on this video might not be quite as good, and that's because I'm covering a lot of real estate on this video in order to show you a lot of different charts. So make this video as big as you can, the window of this video as large as you can, and that will improve the resolution. Okay, and you might even need to, or might even want to change the resolution on your monitor so you can get this on here with a better resolution. Okay, so basically what we're going to do is just kind of put it all together here and look at how I go about actually analyzing things for swing trading. So we've got our daily chart here on the left, weekly here in the middle. This is the monthly chart down here. I like to watch a monthly chart, more for my investing. And up here we've got a relative strength chart. And then over here I've got my quotes of all these various markets. And again, I'll show you a lot of the different markets here that I watch. I'm going to put a text file in and maybe an Excel spreadsheet in as well for this course so that you'll get all of these. Again, you might have to change the symbols on some of these things depending on how your data feed works. And we're also going to give you well, a little demonstration of how I find these, because I'm not always watching the exact same market. So I'm going to show you, how I decide which ones to watch in several different ways. But let's just jump right into it. So this is basically the layout for my swing trading. And the first thing I do is I look at the major stock indexes. So we just click on the S&P here. Now, the one thing is that you can do is on this relative strength chart, rather than use data source 2 as the S&P, my benchmark, I use the Vanguard Total Market Index. And the only reason for that really is it doesn't really matter which one you use too much, but I use the Total Market Index just so I can bring up the S&P, because maybe the S&P is outperforming the Total Market Index, maybe it's underperforming. It's usually pretty darn close. But it's also a quirk of TradeStation that if data 1 and data 2 are the same, it messes up your chart. So you never want to have them be the same. If you ever try it, you'll find out, and you'll have to re-enter your symbols. So since I never scan for the Vanguard Total Market Index, I just put that in here, and then I can put in the S&P as my symbol number 1, which anytime I click on any of these symbols, they will become data feed number 1. And that's basically it. Okay, so let's go through some of these. So what I'm looking for is, of the major indexes, which are outperforming, which are underperforming. So the Russell here, it's been underperforming. Okay, the benchmark is the white one up here, and the one that we're checking is the purple one, magenta. Pretty close to the same. We need to break above these highs to really get anything going. Check the NDX. Yeah, the NDX right here was a trend line break. So NDX is actually outperforming the major markets right now. And the Dow is underperforming. See, the angle is down, so the Dow is underperforming. So if I'm looking to trade one of these indexes, or even look for stocks, probably, the best index to get started with at this point would be the NDX, NASDAQ 100, and so you could just bring up a list of those 100 stocks and start trading those. Start looking at those, I should say, put them on a watch list. Here's your composite, NASDAQ composite, so it's pretty much the same, although they will vary a little bit from the composite to the NDX. Okay, got our futures there. Sometimes I'll check on those. I like to watch the small cap values. Generally, at market bottoms, you want to see the small caps, and I like the small cap values, personally, to start outperforming the market. It's just kind of a conventional wisdom that they do that. And so they're not doing it here. They're not doing it yet. So if this is a bottom to the market here, and nobody knows, including me, then conventional wisdom here will have been broken. Okay, there's our tradables as far as the exchange traded funds of the major markets, the Dow, the small caps, the Russell 2000, the Qs, and the spiders. So if we decided we want to just trade one of those big markets, we would trade one of those. Here's some leveraged long major indexes. So for example, well, let's not choose the Dow, let's choose the S&P here. So this is a leveraged index of the S&P. All right, so a little more aggressive on the wins, but also on the losses. So you get a list of all of these. And here's some short indexes. So if you don't like shorting, but you want to trade the Dow short, but take a long position, you would trade the dog. And as you can see, this has actually been in an uptrend, and is in an uptrend, instead of a downtrend. And that's because it's an inverse exchange traded fund. And these are leveraged shorts. So again, you could trade the same thing, trade the Dow here, but on a leveraged basis. Okay, here's some other leveraged ones. Oil and gas, they're called ultras. Technology, healthcare, consumer services, consumer goods. Ultra Russell 1000 growth, 2000 growth, mid caps. So anyway, again, these are all leveraged. They're ultra, but they represent some different aspects of the market. And there's some more leverage. Let's see. Oh, these are the ultra shorts. So these are the leveraged ones that are for shorts. Okay, then we got our currencies here. And these are the futures. And these are the exchange traded funds for futures. So we'll just click on this one here. This is the US dollar. And so you can trade the US dollar here. And now, here's an interesting one. So you see, US dollar on the daily chart's been in a nice big uptrend, right? S&P has been in a nice big downtrend. But when we look at our relative strength indicator, we see that the relative strength of the dollar is less than the S&P, or in this case, Vanguard Total Stock Market Index. So why is that? Well, it's because during this period here, it hasn't been going up, and during this period, even though long-term the S&P's been going down, we've been kind of putting in a bottom, trying to put in a bottom, and we've had to move up. So just during that short period, the dollar is underperforming the overall stock market. And click on any other currencies you want. Here's some other futures. There's your dollars, your dollar. There's gold, silver, some agriculturals, corn, wheat, Forex markets. Again, we don't need to click on all of these. And then I put all these countries together. And this is, again, these are all exchange traded funds. These are all tradables. Pacific Index, Australia, Canada, Sweden, Germany, on and on and on it goes. There's China down here. Just click on a couple of them for fun. And so what I'm doing here is I like to categorize these together just to see which of the world's markets are outperforming. And as you can see, China has already started doing well. It's already outperforming the U.S. total stock market index. So we're already there, and this would be one to definitely watch. Okay, then we get down here, and these other markets, it's a combination of different things. The vast majority of these other markets that I have listed here are sectors and really industries within sectors. I've got a few stocks that I'll put some stocks in here too. We got Google in here right now, and I'll periodically change them around. But here's biotech. Okay, so biotech is underperforming right now. Yeah, agriculture's been pretty bad. Was great, and now it's been pretty sad. And there's commodities in general. Again, not too stellar, as you could see. Remember, the white line is the stock market, total stock market index. Purple one is whichever one we're clicking on here. In this case, it's the commodity. And so, very much underperforming. Oh, dividends. Sometimes dividend stocks will outperform. Not right now. It's emerging markets. I know that one. We watch this, and again, this one is outperforming right now. Okay, EFA, that's international markets. It's caught up. It's pretty much tracking. Yeah, it's pretty equivalent. Let's go down to gold. And gold is definitely outperforming now. Let me pull this up here. This is definitely one that we've been watching, that I've been watching. And here we go. So I've been watching this trend line break right here. And we've been watching for gold anyway because, you know, it's one of those things where I do consider some other factors once in a while. At least it makes me watch markets sometimes. And one of them, of course, is everybody's talking about a recession, and during recessionary times, sometimes people say they like gold. So we're still in a downtrend on the daily. 50 MA is pretty flat on the weekly. But, again, we've got a nice little double bottom here. We've got a nice spike bottom reversal bar here. And so it's possible that this could be, you know, an opportunity for this thing to turn around. So anyway, you know, we take a shot at it. You know, if you entered, you had an entry basically on this bar. Oh, this is something I wanted to point out because I didn't make it clear on the last video. Hopefully you can see this. Now, if we put our vertical line here on this bar, okay, this is the bar we get the hook. Now, when you go over here to the weekly chart, you'll notice MOM is down, D is down, K is down. Well, that's at that point, but that's not really our entry point. Our entry point is actually on the next bar, right? Because our entry is going to be as it breaks this high, going to be just above the high of that bar. So when you look to compare where is my entry going to be on the next higher time frame, you actually have to move your crosshairs to the next bar. Now, sometimes that changes the bar on the longer term chart, and other times it doesn't. It just depends where you are between those two. This time it does, and MOM is back up. So that's a nice little opportunity there that we're definitely interested in. Whether it follows through or not, we'll have to wait and see. Here's another example, and this is a sector. It's internet holders, and again you could see breaking of a trend line, breaking of a high. This thing's already gaining and has been gaining in relative strength over against the total market index. So that's good. Broker dealers. This is one that I watched. This is a traditional technique. that is very well known among a lot of traders. They say, watch the broker-dealers, because a strong stock market is good for broker-dealers. So if the market feels that, oh, we're going to have a bad market, they're not going to be buying broker-dealers. So it kind of can be potentially a leading indicator. Definitely one that should be on your list. Again, I'm not saying this is the magic list of stocks, and I do change it out once in a while. Natural resources, again, we don't need to click through all of these, you'll get the list. Okay, so anyway, we've got this list, and then when we find opportunities that we want to look at more, then we're going to move it on over to our watch list. There we go. Just need to change my scaling here a little bit. Actually, I need to move this. Okay. No, still need to make this bigger. It's not really our watch list, but here's some other stocks that I watch sometimes. Chinese stocks, Brazil. I also watch India. There's some dividend-paying stocks. Value stocks, recession stocks. So here's just some stocks that have come up through newsletters, watching TV, whatever. Things that people have mentioned that I say, oh, okay, I'll watch it. I'm not going to trade it, but I'll look at a chart and I'll kind of watch it, put it on a watch list, and see if I like the chart. If I like the chart, then I might trade it. Okay. Then, oops, I missed one here. Okay. I guess I don't have it on this particular... Nope, I don't. Okay, so then I'll just create a little watch list, which would just be a blank one, and I just have two categories, longs and shorts. It's as simple as that. I just type them in there, and then those are the ones that I will watch, very, very, very carefully. And that's pretty much it. Now, as we look at these charts, of course, now we're not just looking at our 5 energies. We have 7 energies now. So we are looking at trend. How extended are we in the trend? We're looking at support resistance. We're looking at cycle. We're looking at momentum. We're looking at the next higher time frame. Those are our 5 energies. Then we're looking at volume. See? Now here is an example where we had a nice retest of this low, triple bottom, and we had a nice spike bottom reversal bar here, stochastic double bottom. We had a nice spike volume bar, actually occurs on this bar, which is a narrow range bar. Let's just confirm that. That's how it looks to me. Yep. That's a narrow range bar, so that's one of our rules. When you get a big spike in volume on a very, very narrow range bar, remember that? Generally you want to trade in the direction of the breakout, but you also want to look at everything else. Well, everything else here is we've been in an extended trend, and so therefore it's okay to go long. Mom's up, D's up, volume, unbalanced volume is up. So see, we've got this line here. Unbalanced volume, we're breaking that high. So that's encouraging to the upside. And so this all looks pretty good. Over here on the weekly, though, we've still got this trend line we need to break on OBV. We've had declining volume on the volume histogram. Declining volume. And we're still just in a consolidation pattern here. So we're going to be watching this, and we want to see this thing break out. Our first target's going to be about here. And we want to see some volume coming back in and climbing out of this descending triangle on the volume histogram. And we want to see it break this trend line on OBV as well. Okay, so that's what we're going to be watching there as kind of a confirmation. Problem is, we could be retracing a downtrend on the weekly, so trade it bar by bar. Okay, now let's look a little bit more at how I choose these. So I like to trade exchange traded funds. Like I say, I do trade some stocks also, but I've always got my exchange traded funds up here, and I sort them by volume, the average daily volume based on 90 days. And the reason for that is just so that I know. The only big problem with exchange traded funds is some of them are very lightly traded, see? So I don't want to mess with these. I don't care what they are. I just really don't want to mess with them. Generally, anything less than 100,000 shares per day, I'm not too interested in. And preferably quite a bit more than that, like 300,000 to 500,000 a day is good. So, because otherwise you get a lot of slippage on your trades, you get a lot of wide spreads between the bid and the ask, you get a lot of little gaps that really are not technical gaps. They're just gaps created by late volume, late trading. So none of that is good for us for execution purposes. So we want to trade the more heavily ones. So I go up here and I will start with these, and I just look at what they are, and I choose a variety of different types of markets. So, okay, insurance. So I'd be interested in insurance. I'd be interested in, there's a small cap value. But see, this is the thing. There's a lot of different companies that market these. So, like, here's a Vanguard mid-cap value. Well, there's going to be other mid-cap values, too. I don't need them all. So there's a tech sector, extended market, telecom. Okay, so telecom, I'd be interested in that. Steel, I'd always follow steel, definitely. You can do some international growth stuff, Euro stocks, that'd be good. There's your broker-dealers, definitely want that. There's your Japanese yen, we like that. So the point is, you just want a variety of things so that you have many potential opportunities. When the S&P isn't doing well, there's always going to be a bull market somewhere. There's always going to be a bear market somewhere. And the point is to have enough different sectors, industries, currencies, commodities, soft commodities, ags, metals, just everything you can think of. A lot of different types of markets that are not highly correlated to each other in order to provide you with more trading opportunities. And it's like I say in the manual, if you were in the NASDAQ in 1998, you didn't have to be a genius. A lot of people made a lot of money just because the market was doing nothing but going up, 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 up. So you make it so much easier to make money if you're just simply trading a raging bull market. And there's always one around. Or even a raging bear market. And there's always one of those around. So this is how you find them and make it easier for yourself. Trade those, and but get in early. Don't get in too late. But some of these things can go for years and years and years. We saw it with the euro too. Okay, so these are the ways that you have to find markets to trade. You can go through your exchange traded funds by volume, pick out all the ones that are different. You can just use my list. That's another thing. I mean, that's your quick start thing right there, is just pull up my list, put it into your quote sheet, and boom, it's a great starting point. It gives you many, many different choices, many different markets, so you don't have to do any work. You can scan for markets. and use the stock fetcher scanner, and that also scans for exchange traded funds, by the way. As you know, I gave you the little formula to input there if you want to focus on those, or it'll scan the whole universe of thousands and thousands and thousands of stocks. And then you've also got the relative strength indicator, where you can, of course, do 2 of these at a time, but I also went through where you can put like 6, 8, 10 markets all here on the same time. So you could have all your country markets on one. You could create another chart like this and have all your currency charts on that. Kind of put them together and then just put a whole bunch of different sectors together. And that's going to create a bunch of charts for you to look at. But what's nice about it is you don't have to go through all of your markets one by one. Maybe you have 10 of these windows. I mean, that's about, I think what I have is about 10 of these windows. I can just scan them in 10 minutes. And I can tell you what all the best markets are, where I'm seeing a shift of relative strength and quick decision making. So it doesn't have to take a long time. And then again, as you're looking at those markets and then you're getting ready to enter something or you're considering it, you put it on a watch list and then you start watching it more carefully. And once it's on your watch list, you start watching it on these regular charts that we use. And now you're going to be able to score them on a scale of not 1 to 5, but on a scale of 1 to 7. And just give them a score. 1 is terrible, 2 is terrible, 3 is terrible, and now 4 is even not that good. 5 is maybe okay, but really 6s and 7s are going to be your highest probability trades. And so remember, the 2 new energies you have to measure are volume and the relative strength. And so this can help increase your odds of success even more. Also watch for your gaps on these, breakaway gaps, measuring gaps, and exhaustion gaps. And all of this put together can help you do extremely well with swing trading.